For more on today's market sell-off, we're joined now by Julian Emanuel of BTIG, who I saw on Thursday, and you were in a great little mood on Squawk Box. We were up 500 the day before, remember?
Yeah, absolutely.
How are you feeling today?
You know what? We said this is a process. This is a process. When you have a straight line sell-off like we had in the month of October, to expect a V bottom and sort of a race to the highs, completely the wrong way to think about it. 10% corrections tend to take from 60 to 200 days to regain the high. Okay, so that's the context. Second context is that November tends to be a positive return month. We still think it sorts itself out that way, but it actually stays volatile until the Thanksgiving holiday for the most part. And with Trump and Xi meeting on the 29th, expect it to stay volatile all the way till then. But then the third, the elephant in the room, we can't get around this. Basically, the market is saying is that political risk is higher. And it's obviously
higher since the midterm elections.
So what is one of the issues that both Democrats and Republicans seem to agree on? And that is a trade, a harder line against China. So that is something that
why isn't it still Powell? Especially with what happened to oil, global slowdown. When does he go from 1 next year instead of 3, or at least go to 2 more increase? I mean, Cramer's been talking about. When does he throw in the towel and say mission accomplished?
He won't say it likely in December. Then
I don't know if it's trade.
But now that you have 8 meetings, you could very well say it in January, where you've got a press conference.
You think he's starting to waffle? Do you think he sees days like this and says, maybe I was a little bit too hawkish?
From our point of view, the Fed has, throughout history, tightened too long. And if you go back to the 06 tightening cycle, you didn't see financial conditions get materially tighter till it was too late. The problem here is if you don't have progress on the trade front, things could go south very quickly. And from our point of view, even if you don't have a material economic downturn, the potential for more multiple compression, you've already compressed 3 multiple points this year, is there in 2019.
But I guess that's where I would push at you, Julian. I mean, and congrats, because you come on here with ice water in your veins on down days, and you say the same thing, which I think is very constructive for people at home. Not because you just want to believe the same thing. I think you believe there's a process. I'm worried about S&P earnings in 2019. People tell us we're going to grow another 7% next year. I don't think we will. I think the status quo has priced things wrong.
So to us, mid-single digits in an environment where the Fed takes its foot off the accelerator is going to be sufficient, particularly if you're taking off the pressure off the rest of the world. And then, we go back to trade again. Emerging markets have already taken it on the chin. Europe has already taken it on the chin. After the last few days, is the probability of auto tariffs against Europe lower or higher? It's probably a little higher. But these are the kinds of things that we have to deal with and realize that there is a material knock-on effect potential into 2019.
So, Julie, I'm curious. You're saying mid-single-digit returns for next year or earnings? I want to clear that up.
Earnings.
Okay.
Earnings.
So then you have volatility coming in. Wouldn't it be better just to buy bonds at 3% than deal with the single-digit earnings and volatility of 2% or more on any given day?
They're all interconnected. You look at this year, and even let's say we pull back to sort of flat on the year at some point, and bonds still have looked, quite poor. From our point of view, the story with bonds is a much longer-term circumstance that you really have changed the psychology over a 2 to 3 year period to where bonds look like the yields are going higher, looking out over the next 3, 5, 10 years, and that's the risk.
All right. Very good. This is a pretty easy show to do. I mean, you guys have a lot to say, don't you?
We're not afraid. We're not afraid.
Really, I've got very little to do.
It's unbelievable.
Watch this. Thank you, Julian. Now, are you ready for this?
Yeah.
Okay, I'm going to do it because it says it right here. Steve Grasso, are we heading for a year-end rally? What'd you do? Draw the short stick? You have to say? Or what?
I don't make a move.
Yeah, I have to make a binary thing.
Would you
binary
guys?
move right
Well,
here.
you know
Pete
what?
had all the
Yes.
answers at the top
Are
of the
you
show. I
will-
have it at the top
yeah.
of the A block, at the bottom of the A
It's
block.
unbelievable. So will there be
So I think it's what Julian said. I think
Oh,
you
you're
have to
putting it
get.
off on him.
I think you have to get a
By the way, he's
flush.
not even here right now.
He's
Don't
been
bring him
excellent.
back.
Good guy.
I didn't ask him what he said. I just told you what he said. So I am threading that needle again. I think you're going to see a sell-off. I think it's going to suck the most amount of people in as possible, and then we're going to rally into year end. So yes, December I see as a higher month.
One thing just to talk about today that concerned me was the move in oil after OPEC seemingly stepped in and
Right.
said, you know, we've got some resolve here. Oil finishes lower. Remember, the last time oil was potentially in this kind of a move where we were talking about too much supply, the dollar was getting stronger, and the rest of the world at least was concerned about lower growth. This was a very difficult time for risk assets, certainly for oil and certainly for ultimately the global
How can oil
risk
move?
market
How can
financial.
oil move higher when you have Russia, United States, and Saudi Arabia pumping at
So
record
you still say
levels?
supply. See,
So-
we argued this morning, was it supply or demand? And,
Yeah.
and when with the Saudi news, it looked like it was supply because it was up this morning. It was
Right.
up 1%.
Right. I think it's a
Closed
supply-
down by
I
the
think
end of the day, then it's not supply. Maybe it is demand.
With the
How do you
Iranian
know?
sanctions, I think everyone was in a rush to pump a little bit more. So you had the Russians step on the gas, you had the Saudis step on the gas. But when you get waivers for a bunch of different countries, that can't help but cause a glut in the pipeline.
I hope you're right, because if it's demand, we're in a heap of trouble, right? I mean, when it drops down 20%, if it's not supply and it's something we don't know yet about global demand, you agree with that?
Yeah.
Price is truth.